Hello and welcome to another edition of Doing Business in Rwanda. You're with me, Narengwa Fiana-Muthoni. Africa is racing to slow down and eventually halt the spread of COVID-19, a pandemic that has already shook the continent, claimed lives and sickened thousands of others. Rwanda was the first country in the sub-Saharan Africa to order a total shutdown to mitigate the spread of the virus in the country. Over the next 13 minutes, we spoke to key players in the Rwanda's finance sector to find out how they are navigating the storm that is COVID-19. In a bid to prevent an economic shock, the National Bank of Rwanda floated a liquidity support of 50 billion Rwandan francs for banks to be able to borrow at the central bank rate of 5%. Moreover, it eased the normal bank loaning procedures for both commercial banks and its clients.
I think the first impact we expect is on the clients of the banks having challenges to service their loans because of reduced businesses, especially on the tourism industry, travel industry. So we expect those to have challenges with their cash flow. So one step we took was to authorize banks in a special way to deal with these customers that would have hardships in servicing their loans, to restructure their loans, to give them breathing space. And as you'd expect, this could create challenges of cash flow to the banks themselves, but also the reduced business activities because of the precautions being taken to limit the impact of the virus. We expect to see limited deposits going to the banks. So on top of allowing banks to restructure these loans, we are putting in place a facility, a liquidity facility to support banks that might have cash flow challenges because of this situation. And so we've put up a facility of 50 billion Rwandan francs that banks can access on our central bank rate. And this is extended beyond the normal central bank facilities that would go maximum 7 days. We are putting this at 3, 6 or 12 months. So that is one measure that would help ease banks that could have financial, cash flow challenges. Then the other is temporarily we reduced our reserve requirements from 5% to 4% to free some liquidity to the banks over the next 6 months that can help them to deal with any liquidity shortages.
I think as a large bank in the country, our clients have been affected, so we also have been affected. We've had to activate our business continuity plans. We are still operating, but at a slow pace. And of course, the biggest problem is that our clients are affected, and many of them cannot pay their loans. And we've had to work with them to defer payments and find other measures to provide relief. Many of our clients have come forward to request some relief in the form of a restructuring. We've been implementing that for the past couple of days. But also what we've done is to tell clients who don't want to restructure, who wants to still pay their commitments, we've told them that we will waive all the late payment charges, because we understand everyone is affected in some way or another by this crisis, because everyone has cash flow challenges. Even the businesses that are not in the high risk category somehow are affected.
We have decided to reduce our lending rates by 0.5%. This is our first move. The move is intended to support those that are struggling under the burden of high interest costs. During the pandemic, we have a number of customers who have either lost income or have had to accept a reduced income and therefore are struggling under the burden of interest rates. And we thought it would be an appropriate time to focus on bringing down costs to our customers. So right. The actual announcement is a 0.5% reduction in our base lending rate from 16.5% to 16%.
Globally, the stock market has responded to the COVID-19 pandemic with worrying volatility. The market has reacted to the recent unpredictability with large drops. But according to Celestine Rwabukumba, the CEO of the Rwanda Stock Exchange, the effects are yet to be felt here in the local markets. Also, the governor of Central Bank, John Rwangombwa, shared that for the next 6 months, the central bank has offered to buy back bonds at the prevailing market rates.
So far, what we have seen, the levels of liquidity in markets like that, advanced markets is very high. Any event, the markets react quickly. So for on our part, on this side, the markets don't react as quickly as the other markets do, given that some of the assets we have on the ground are still stable. The numbers are still the same. So the markets have not really reacted that much for us. Yet, from what we can see so far. So, a matter of fact, what we've seen increases in volumes, slight increases in volumes. Price stability is still there. The shares have remained flat from the first time we reported the first, for example, the case of the virus. For example, the market has remained flat, so the shares are not trading much, but the volumes have from that time a bit okay. So there is not that much that has been happening. If you compare comparatively Q1 2019 and Q1 2020 up to today, we've seen there was an upward trend on some of the counters, which influence our main index, which is the all share index, has gone up at 10.7%, which is basically including all companies that are listed on the market. That one is the one which influences the market cap too. So whereas the domestic counters have remained completely stable, so we have not seen any much movement in those directions. Yeah.
To support the investors in our capital markets, just in case you wanted to liquidate your security on the capital market and you're not able to get buyers on the secondary market, normally we had a discount window that if you in the market for 30 days and you don't get buyers, we are ready to buy you back your security, but then would apply a sort of a charge of 3% on the market price. The new measure is that you don't have to wait for 30 days, you wait for 15 days, and then you can come to us and we'll buy your security on the market price.
According to the spokesperson of the Private Sector Federation, Tionest Ndajenjedwa, some members of the business community in the country are already benefiting from the measures that were put in place by the central bank.
Actually, we are happy that the government took that decision because we are now starting seeing the impact of it, especially with loans we had on the banks. And as banks accepted to look into the loans which have been owned by the private sector, they are now trying to see how they can manage the payments, how they can delay the calculation of interest penalties. So for some business people have already started benefiting from the proposed plan to help those who are affected by COVID. And also we are hoping that in the near future, most of people are going to also to get loans, which are going to help them to continue their businesses once that the lockdown is completed or finished.
Governments, financial institutions, and telecommunication companies are putting more emphasis on cashless payment systems and encouraging physical distancing due to concerns that COVID-19 could be spread by paper money and coins. According to the governor of the central bank here in Rwanda, infrastructure is in place, but how effective is it?
More emphasis on the digital channels now that we are limiting the physical contacts. Yeah, it happened. This is technology. At times you have issues here and there, but at least we get the commitment from the financial institution that they are going to really double their efforts to make sure that all their systems are up and running without any big problem.
We've had an overwhelming response to the reduction in fees on digital banking or our alternative banking channels. As a matter of fact, we've seen a 650% increase in use of digital channels since the start or since the announcement was made. I think that was back on the 18th of March, if memory serves me correctly.
In times like this, definitely I wish we were 100% automated, fully automated. However, we are in the process of doing that. Of course, we have taken a few measures here and there to make sure that we actually eliminate physical contacts with the members, trading members, general public into the market. So we have made special arrangements to make sure trading continues uninterrupted. And issuance is taking place. We have actually an offer right now in the market. Right now, of course, at the primary market level, there's an ongoing bond right now, and we expect a few companies still to come to market in the next few weeks or so. To start for listings and stuff like that. So, but coming back to the real automation of the market, we have this project which has been going on for some time now, and we are working on it with our regional counterparts in the East African community, which will link us to the other stock exchanges in the region. But specifically, we have a target date of going live by June this year. Of course, with the current circumstances, we are still watching what happens. The lockdown, how long it's going to take, is likely to influence also on when we are exactly going to go live. But otherwise, the work has been done at 95%.
Rwandan banks have set up strategies and interventions to support the local economy during the duration when economic activities are expected to slow down. We understand what I&M Bank as well as a Bank of Kigali are doing to cushion themselves against the impact of COVID-19.
To be able to weather the storm, we've made sure that we are in a position where we remain liquid. We will, where it makes sense, and that is in most cases, we will support our customers over the period. You in fact will see assets increase within the banks, and it's been proven during the 2008 global financial crisis that it's better to stand by your customer and your customer to have a higher debt burden than to deal with a liquidation or a company going out of business.
As far as we're concerned, maybe you remember that we raised fresh equity in late 2018. So we have a very strong equity position that can help us weather any kind of crisis. So we are prepared. We've been very prudent in the past. We've taken large impairments for loans with the new accounting standards, IFRS 9. So we have good cushions, we have good capital, we have strong liquidity, and we believe these are the right ingredients for us to face this crisis and eventually to support recovery when recovery starts.
That brings us to the end of today's edition of Doing a Business in Rwanda. I was your host, Naringwa Fiana-Muthoni. For more episodes, do visit our website at www.cnbcafrica.com. Thank you so much for watching. It's until next time.